What is up, everybody? Welcome back to today's video. My name is JMTRADEZ and I really appreciate you guys being here. If you guys enjoy the content I make, please do not forget to like, to subscribe, to share the video. It really helps grow the channel and get this content out to more people. So today's video topic is going to be something that destroys a lot of price action traders. I'm a price action trader. I trade support and resistance. I trade supply and demand, etc. So something that kills price action traders and something that really makes sure that their win rate stays low is actually something called conservative and aggressive entries. So if we look here, we have our area of key interest. We have a supply zone right here. The conservative entry is what they do is they'd set a limit order right here on the edge with their stop loss somewhere up here. And then just as soon as price hits the limit order on the edge of the supply zone here, support and resistance zone, whatever key area they're using, they'd be tagged into the trade. Okay. I used to do that all the time. That is something I used to do. I used to set limit orders on supply and demand zones, on support and resistance areas, any type of key level that has to do with retail price action trading. I would just set my levels there and I'd lose a lot of trades of it. Sure, there'd be trades that I won. There's no doubt about that. But a majority of the time, price would just come up to my aggressive area, tag me into the trade immediately, and then just blow me right through the stop loss. And I really had to get out of this mindset of not wanting to do that anymore. So let me show you an example here. Here we are on NQ. We have an area of demand right here. So this area of demand was a sell down before a buy up that ended up breaking structure right here. So we do have this area of demand. What is an aggressive entry compared to a conservative entry? So what would happen is we'd have some supply and demand traders set a limit order right on this yellow area right here. Stops would be somewhere in this area, and then they'd retarget these areas like up here. So as soon as price tagged them in and touched this area right here, this yellow line, they would be in that trade. There's nothing good about that, in my opinion. Of course, if something works for you, do it. I am never going to argue that. But in my opinion, there's nothing good about trying to tick the move to the exact so you can get in. Okay, I don't want to say that, being a conservative entry trader compared to an aggressive entry trader makes you a better trader than somebody else. But what it definitely does is help you eliminate unnecessary losses. So something I would do is wait for price to come back, tap in, but I'm not just going to enter off the tap of the zone right here. I'd wait for price action to, let me redo that. What I would do is wait for price to come down, continue to reject, maybe show me something, and then I would get in somewhere in this area based off something price showed me, like that. Okay, that is what I had to switch my mindset to. And like I said before, it does not make me a better trader than somebody who's an aggressive trader. An aggressive trader is not better than me because they are an aggressive trader. For me personally, I felt like I was wasting so much time trying to predict moves to a T. We as traders are not meant to try to predict moves to the very tick. We are meant to adapt and see what price does. So the next thing I'm actually going to do is live back test a couple trades. I'm going to do some with limit orders and some with how I currently trade price action, which is waiting for more confirmation. So I'm here on my TradeZella account, which if you use code JMTRADEZ at checkout, they'll give you a percentage off. So what we'll do is we'll end up starting on the charts here. This is YM US 30 on the 5-minute chart. We'll go ahead and just mark off an area of demand right here. So we have demand, a nice sell down before a huge buy up, that broke structure to the upside in this area right here. So what we will do is we'll set a limit order. We'll just set a limit order right here. And hopefully price comes down to it. We will set our TP up here. We'll put our stop loss a little down here. And that's what we'll do. We'll just set a limit order on this demand zone right here. And it'll look something like this. And yeah, so that'll be our limit order right here. Let's see if we get tagged into it. We do. We get tagged into it and we immediately get stopped out. So that's what I'm talking about. You can't, how much that loss could have been avoided if you just would have sat there and waited for that extra confirmation. So what we'll do is we'll go on to the next day here and select 940 again. And yeah, let's do this how I would currently do it. So right here we have an area of demand down here. Okay, tons of structure being broken with that demand. We'll hope price comes down into it. It breaks that demand. So again, imagine if you would have put a limit order on this line right here. Bang. Let's go back and play out what would have happened. Let's say you put a limit order right here. Bang. There's your limit order. Price comes down, tags you in, doesn't even give you a chance. You already stopped out. See, that's what I mean. There is so much more potential to eliminate unnecessary losses and take good trades when you actually wait for extra confirmation and be conservative with your money. So let's see if we can end up getting a trade here where I would wait for my extra confirmation. So here we are on the next day here. We do have a pretty nice looking demand zone right here. Wait for price to come down into it if it ever makes it. No, but we do get a fresh demand zone right here. As you guys can see, we get a tap into it. We get a break of the candle. So basically what I'm looking for is the tap into the zone. Price gave us the tap into the zone right there. Okay, so clearly we were rejecting it. Next, all I'm waiting for is the previous candle's high to be broken. Okay, so we get that. We get that entry right there. We could go stops below right here, and we could target something in this area up here. So this is something, oops, I still have it on limit order. Target something like this. And we'll buy. Bang. Let's see. There we go. Almost get stopped out. Boom, move stops to break even. Bang. And we're going to hit take profit. See what happens if you just wait for extra confirmation. And sure, if you would have put a limit order right there, dang, you still would have won the trade. There's no denying that. But imagine on the other trades, if you didn't put the limit order and you would have used this instead, you would have not lost those trades most likely. So that's what I'm talking about when this is a mistake that I very commonly made in the beginning of my supply and demand trading, and it wasted so much time. So guys, if there's something I could give you, and even if you're not a supply and demand trader, maybe you're just an aggressive entry trader on whatever strategy you trade, I highly recommend looking for extra confluences before you enter the trade. Without further ado, guys, I hope you guys enjoyed this video. Love you guys. Always praying for you guys. Hope to see you in the next one.